How's it going, guys? Liam here from AltSignals. Today we're going to be discussing candlesticks and the patterns and giving you an overview of how they work and how it can help you with your trading. So as always, if you could give us a like, subscribe, hit that notification bell, and we'll get started.
AltSignals.io.
Okay, so here is a standard chart for Ethereum perpetual futures contract on Binance, and we're on the daily chart. So we're going to break down what a candle is, and we're going to give you an overview on how they work and what they represent. So each one of these candles represents a day of trading volume. So the price moving up and down, and you have an open and a close. So if we just zoom in here. So for instance, this candle was for the 8th of May. And how this works is, a blue candle will more than likely be green on your trading view if you haven't changed the colors. But a blue candle for me is a bullish candle, essentially. And a dark gray with a red outline is a bearish candle. So price goes up, we've got a blue candle. Price goes down, we've got a gray with red. And how this works is, on a bullish candle, the open is at the bottom and the close is at the top. Whereas a bearish candle is the open is at the top and the close is at the bottom. Now you'll probably see as well, you've got these little lines in the middle of the tops of these candles. And essentially what they are is what's called wicks. And that's where price has that's where the price has got to. So that's the highest high that we got within that day. But it closed below that high. So the actual price did get up to say 3983, but it closed at 3919. And that again is the same at the bottom. So you can see here there's a tiny little wick at the bottom. And again, so that means that the price opened here, it went down to 3455, but we managed to again rise up. So this whole big large body essentially is the price going from the open down here from this previous candle where it closed, and we saw that rise all the way up to 3913. And that's the same for the bearish candles. So you'll see here we had a bullish candle previously, so it opened at this point here, the price went all the way down to here, 3780, and managed to come back up and all the way up to 4186. So what happens there is the candle closes and then we start a new candle. So the candle for this bearish candle opened at this price. So what has happened in that time, the price has risen all the way up to 4378. But more people in the market have been selling because, again, this is a high price, so people will have been selling. So essentially what this means is, as time has gone on throughout the day, the power or the price of Ethereum has slowly gone down and continued to go down all the way down to 3722, and finally worked its way up to 3826, which is where the candle closed. So this area here represents, like I said, a whole day's worth of trading in terms of what's happened. And once you understand that that's how a candle works, you can start to kind of get an idea of what's going on with price as well. So the wicks are quite important to give you kind of an indication of what's been happening with price. So for instance, a good example is this wick here. So we had over the past couple of days leading up to the 8th, we saw price continue to move up. We saw a little bit of a down, but as you can see here, it tried to make its way further down, wasn't able to do so, and it closed here. Then we saw a strengthen in price, and we saw a bullish candle come up, and without much wicks either side, so that was a strong candle in terms of the price. Then we saw two candles here, which you can see are very small bodies, and not much happened with price in terms of the open and the close. However, how far price went up, as you can see here, the 3606 or 3612, and the price went as far down as 3385. So the candle, potentially what happened here is the candle opened at this price, we saw it shoot down, or we saw it go up first, and then it shot all the way down, and then finally buying power came in and closed the candle at 3478 or thereabouts. Same again with this candle, so not much has happened in terms of either way really. We've kind of stayed level throughout the past two candles, and what has happened here is it's gone up in price and then it's dropped down in price, and it hasn't been able to stay consistent by moving down. So we've seen the price move up and then finally it closes there. So there wasn't much price action happening in terms of that candle. And then we move on to this bullish candle, where we see a massive surge in price up here. And again, this is a daily candle, so this is 24 hours worth out of information in terms of what happened with price here. And I mean, this one day alone was around about 12%. So it moved up 12% in one day. And then again, we see this kind of process here where price, the strength of the price has started to weaken, because every time we've tried to get new highs and push for new highs, as you can see here, it's always been pushed back down. So even at this point, this candle moved down from here around about 8% before it finally closed above the previous candle ever so slightly. And then again, we saw a strong candle come in where closed here on price. More than likely price dropped, and then what's happened is price has finally made its way back up. So that's a sort of very basic breakdown of what a candle is. So again, more than likely if you're new and you're on TradingView, you'll have green and red candles. Your green candles essentially are bullish candles, red candles are bearish candles, and everything on the outside, the wicks as we call them, represent where price has been but didn't stay. And as you can see, how these bodies form is only based on from the open and the close. So that's why you get wicks, because the price opened here, and then again what's happened is it's moved its way up, hasn't been able to stay up, it's made its way all the way down to here. So this body is created from the open all the way down to here, hasn't been able to stay down, and moved up in price ever so slightly and finally closed, and that's how the body is formed. Now there are multiple different patterns and different charts and different candlesticks that people use to give them an indication on what is happening with price. So for instance, I'll just bring up a chart here, and you can see that there are a number of different candlesticks and candlestick patterns. So for instance, here we have the hammer candle. So we've seen price go down. This hammer candle has formed, which is essentially a long bottom wick with a small body on top. This could represent a reversal in price, and now we're going to see some bullish candles. So two reds, hammer candle, reversal in price, price goes up. Same again for a bullish engulfing candle. Now, what a bullish engulfing candle is, essentially you have your red candles going down, and the previous candle has a small body and small wick, and what would be a bullish engulfing candle is where the body of the candle, so this can be either way, both bearish and bullish, the body of the candle covers the whole previous candle. So you can see that the green body on this candle is much larger than the body and the wick of the previous bearish candle. So again, this would be a sign on price reversing and heading back up. And then again, you've got all these different ones: piercing line, inverted hammer, morning star, so on and so on and so on. We're not going to go through all the candlestick patterns because it'd be a very long video, and to be fair, it's something that you would want to study yourself. But you can literally go to Google and type in candlestick patterns, candlestick pattern cheat sheets. Again, all these different patterns represent a particular price action. However, they are not always 100%. So it's worthwhile studying charts, putting time and effort into understanding the different types of patterns, what they represent, and spotting those patterns in charts, and do your own chart analysis as well, and kind of get the idea of what seems to be a viable chart pattern that seems to pay off quite well, and then use those within your arsenal of different tools that you use for your trading as well. And again, the overall pattern, I mean, if we zoom out here, you can see how price has been affected and how the candles have represented this. So we obviously had our all-time high at 4383. Price couldn't sustain at that level. So what has happened here, and what the candlestick is telling us here, is that once the price got to this level, the selling power outweighed the buying power. So at this point, more people were selling Ethereum, so much so that it moved the price all the way down to 3832. And then again, we saw a push again in price where people were trying to buy, and the price started to head back up, and that got to 4041. But again, there was more selling power than there was buying power. It pushed it all the way down to 3484, and again, some more buying power pushed the price up to 3722. Again, this candle kind of gives you an indication of there could be another surge in price heading up, because the bottom wick is pretty much the same size, if not slightly bigger than the top wick, which means that there's more buyers coming back into the market to jump on this price. And as you see here, the following wick, there's a huge surge in price, and the body is consistent all the way up to 4082. So perfect. But then what people would think is, okay, the price is going to start heading back up. If we look at previous candlesticks, we see candlestick move up, we see price go down, a nice thick body candlestick, price same here, and then another surge in price. And then what people would expect is from this candle that price would start to head back up again, and we'd see a new all-time high. Obviously this didn't happen. What we then saw was a body that was larger than the previous candle, and the price surged all the way back down to 3641 and continued to move all the way down. And again, another example where if you would have looked at this one candlestick and seen how the price has gone all the way down and it's been pushed back up, and then we saw another surge in price, this candlestick here, potentially people would think the same thing. Okay, we've had the price reach again highs of 3879, couldn't push to that, keep at that level. Price surged all the way down to 3327. Finally, more buying power came in, and the candle closed at 3577. So from this candle and this candle, they're quite similar. So what people could be looking at is we're going to see another bullish candle for the next 24 hours. And in this case, it did the complete opposite. We saw a further surge in price. Buying power couldn't sustain, and we closed at 3275. We again saw some buying power the following day, so a bullish candle. So people again maybe would have thought, okay, once we get through this day, we're going to see another surge in price, and the complete opposite happened. Obviously, a lot of things come into play when you're looking at crypto, trading crypto. The news has a massive effect on price. Obviously, buyers themselves, retail investors, institutions that are investing as well. All this is data, and those candlesticks are what essentially hold that data. So it's very important that you use multiple tools and analysis to distinguish where that pattern is coming from and whether or not that pattern is valid for you to jump into a trade and feel confident in where you expect the price to go. So again, it's a very basic rundown of what candlestick patterns and candlesticks are, but as you can see here, how this one candle played a massive role in the coming days of price continuing to work its way down and see some consolidation. And now we're in a position where these candlesticks are a lot smaller, and what we could potentially see, and this would be a good example here where we've got this candle right now where what it looks like is the selling power is becoming less prominent, and buyers are starting to keep the price above 2000. So again, what we could then see now is a move to the upside from this price, from this candle here. but again, that could mean nothing. Again, perfect example, we saw that kind of pattern here, slight move to the upside, and then back down in price again. So candlesticks are great, and there are books and content online to find different chart patterns, print them out, keep them on your desk, keep them in a book, or you can buy a book and keep the information there, so you can kind of use that as a reference to see what you expect to happen with a particular pattern or a particular candlestick. And obviously using other indicators, using the AltTrader indicator that we have, could show a lot more in terms of where the price is heading over the next couple of days. So that's the short video for today for candlesticks and candlestick patterns. As always, if you could give us a like, subscribe, hit that notification bell. And if you do like these types of videos, then please, again, leave a comment in the section below on other indicators or other educational videos that you'd like to see, and we'll start putting those together for you as well. As always, guys, have a great day.